Yeah, so understanding what you earned in your business is a really important piece of data. It helps us know if we're profitable or not, and if we're not profitable, why we're not profitable. If we are profitable, how we can make that how we can make that metric better. So one of the things that we want to first do is make sure we're tracking all of our activities. So all of our transactions that we have during the year or during the month or during the period we're looking at, and making sure we have all that information. If we don't have a complete set of information, then it's really hard to understand what we earned. Once we do that, then we need to categorize those transactions into its proper categories, whether that's an expense or a revenue transaction, or an asset or liability or equity transaction. Once we do that, then we can have a good picture and sense of what we've earned, looking at how much money we brought in from our sales activity, and then how much money we spent in our expense activity, to ultimately get to how much money we've earned. And by knowing that, we know if our business is doing well. It's a good health check on the business, as well as understand what we need to do to change our business in order to make those metrics better. So if we have lots of expenses in place and we're running a net loss, we can see, okay, what expenses we need to cut, or alternatively see what revenue we need to obtain in order to get to that break-even standard. Knowing what we earn is really important in business. It's not just something we can look at a bank account and say, okay, well, my bank account changed by $2,000 this month, and that's how I know how I did this past month. But it's really looking at all of our activity and every transaction we've entered into to determine how well we've done in this business.
Once a user signs into FreshBooks, this is what they see. This is the dashboard page, which gives you a quick synopsis of your business health. You can look at your outstanding revenue, total profit, revenue streams, spending, and so forth. You also have an option of creating a new client, retainer, invoice, other income, expenses, estimate, just by clicking on the Create New drop-down button right here. So let's get started by creating an invoice. Once you click on Create New drop-down, click on Create Invoice. This will then take you to a new invoice page with a draft invoice, and all you have to do is add a client. I already have an existing client list, so I'm just going to pick a client from there. And then you have an option of adding a service. In this case, let's say I'm providing blogging service. So let's add blogging. I have a pre-populated list for items and services. As you can see, my rate for blogging is already populated here. And then I can add taxes. Adding taxes in FreshBooks is also very simple. You can switch the tax you want to apply to this line item. So here, let's assume this line item has 13% tax. Once I hit apply taxes, the taxes would get applied per line item. As you can see, if I only have one line item, my subtotal is 95, HST is 1235, and my total is 107.35. Now that I'm done pretty much creating an invoice, I can send it just by clicking the send button. But before I do that, I just want to show you guys some options on the right-hand side, which a user can use in order to send reminders, charge late fees, change currency on an invoice, make an invoice recurring. Also, you can customize the invoice style and then accept online payments. We'll talk about accepting online payments in a second, but if you hit send, and send invoice, you're pretty much done sending an invoice. To add a payment or accept online payments in FreshBooks, you just have to complete this setup. And once you're done, you will then be able to receive online payments, and we will do the accounting entries for you in the backend, which means during tax time, it's really straightforward for you to go ahead and file your taxes with all the accounting data. So far, we have covered creating an invoice, sending an invoice, accepting online payments. However, there are situations when you don't send an invoice and you have to track your income. FreshBooks makes it really simple for you by tracking it in a place called Other Income. So if you click on Invoices and then select Other Income, it will take you to the Other Income screen. In here, you can track all your other income. Let's do a quick example right now. You click on this New Income Entry button and enter the source of income. For example, if my income is from Amazon sales, I can enter Amazon as my source, create Amazon source, Then select, was this an online sale? It was. Let's say it was for $200. Pick the currency, which is USD in my case, and then I have an option of adding tax. So if I want to add tax, I can say, yes, this amount includes the tax. And for example, the tax name is HST. On 200, it's $26. And that's pretty much it. I hit save, and I'm done tracking this in FreshBooks.
So you should be tracking every single expense you have. Any expense that is a business expense should be tracked. It needs to be ordinary and necessary to your business. We need to know what all those expenses are. Those expenses can be, things like buying supplies, or your payroll expenses for paying your employees, or some of the costs that you need to provide your services. We need to know what all those are. And it's important to understand what those are and appropriately categorize them. So understanding it from a aspect of how many, how much we have in different expense categories, so we can know where we're spending our money. And then from there, we can know how we can change those numbers. So if we're spending too much, and let's say our meals and entertainment category, we can reduce that in the next month or next period to have a better result there. This is also important when it comes to taxes. So if we don't have a good grasp of our expenses, we have them all kind of littered around in a bunch of receipts, then it becomes really hard to assess what expenses we have. And those expenses are deductions for tax purposes. So if we don't have a good sense of what our expenses are, we're losing deductions and ultimately paying more tax as a result of that.
To record expenses in FreshBooks, you click on this expense link on the left navigation bar. Once you do that, you land on the expenses page, where you can add expenses in 3 different ways. The first way to add expense is by clicking on More Actions and then selecting Manage Bank Connections. This will take you to Bank Connections page, where you can attach a bank account, or you can connect your bank accounts which you're using to pay your expenses. What this will do is create some sort of automatic feed where FreshBooks will pull in all the money out transactions into expense column. And not only that, we will auto categorize these for you so that when you look at your profit and loss statement at year end, you're ready. You have all different categories, which are tax categories approved by IRS. I will show you an example of that in a minute. Another way of tracking expenses in FreshBooks is you can import a CSV file. Click on More Actions again, import expenses from file. Then you have to choose the right file for you and go from there. This would also create expenses in this expense tab, which would then be viewable at year end in your accounting reports. One other option which we allow in FreshBooks to create expenses is by clicking on the New Expense button. Let's walk through this. Once I click on the New Expense button, I can add a category. These categories, as I mentioned earlier, are coming from IRS tax categories list. So it makes it really useful for users to pick these categories and be prepared at tax time. You can also attach an image of the receipt so that you don't have to use a shoebox at the end of the year. Add the name of the vendor. So why don't we walk through a real example right now? Let's say I had to do some car repairs, and those car repairs are related to business. I'm just gonna add the name of the vendor, create vendor. I can also attach a receipt. So let's do that right now. I am going in here. I am then selecting this. Okay, this looks like my Mr. Lube receipt. Hit open. The receipt is now attached to this. Let's assume I spent $110 on this. I've added that. I can add taxes. So again, for this purpose, let's assume the tax is 5%, apply taxes. What this has done is a reverse calculation of 110 and then calculated, okay, the subtotal should be 104.76 and the taxes should be 5.24. So this is how you can manually add an expense in FreshBooks. Now, After adding an expense, you also get a few expense settings. You can mark this as billable, and what this really means is you can bill your client for this expense. Make recurring. If it's a recurring expense, you can choose that option, change the currency, also mark it as cost of goods sold. So you have a couple of options there. This is how simple it is to track your expenses in FreshBooks. And ultimately, all your expenses will show up in this expense list and also in all your accounting reports for year end.
So the best and top three most common expenses, I would say, are research and development, which is not a common category that people think about. But when I look at the line of work that most solopreneurs and even creative entrepreneurs are doing, a lot of the kind of work that we focus on really is in the name of developing the product or the service that we are planning on providing to our clients and customers. And so by way of research and development, that can mean so many different things to so many people. But say you are an entertainment-based company and you have a lot of entertainment clients. So maybe something like going to the movies to research a particular topic or subject in line with working with a potential client makes sense. And to me, that does fall under the definition of research and development. If you are a chef and you're testing out new recipes for an upcoming meal or dinner that you're preparing for a group of clients or even a single client, then perhaps the ingredients that you're using to create this recipe is all part of and in the name of research and development. Another really good expense to write off is rent. Whether or not you are based out of a home office or you are formally renting some sort of studio or shop or office space, those are all things that can be written off, absolutely. And in the case of home office, this is something where you can work directly with your tax advisor or tax accountant to understand what square footage of your home office can be written off against your total rent paid each month. And then a third one are automobile expenses. And this one gets a little bit tricky because if the vehicle that you're using isn't exclusively for the business, then you can track things such as mileage and or expense things such as gas when you are using the vehicle specifically for business use. So while you may or may not necessarily be able to write off, let's say, car payments because it is something, the vehicle is something that you are using for personal use as well, in the specific instances that you are conducting business and have to use your vehicle, then those specific instances are areas where you can save all the receipts incurred for expenses used against your vehicle for business use.
Yeah, so the first report that you'll need when you look to file a tax return is your profit and loss statement, or otherwise known as your income statement. This statement is a detailed list of all the revenues you brought in and all the expenses that you paid out. And ultimately getting down to that net income number, which is what will help drive the taxes. So we need to know what those are. Depending if you're a cash or accrual taxpayer, we're going to need to know what you've invoiced out and what you've expensed. So if you're an accrual taxpayer, you may have received bills that you have not yet paid. And in that case, we want to know what those are because we can take that as an expense in that tax year. Same thing with invoice. If we've invoiced money out and we've not been paid on that, we want to know what that is as well, because that is also taxable income that period for an accrual-based taxpayer. We also want to know any kind of expense activity, whether it's expense reports from employees or other team members. that need to be submitted, because those are our expenses we want to make sure we get our handle on and get those in our books and records so we can take that as a deduction for taxes purposes. We're also going to take a look at your balance sheet. Your balance sheet may have items on there like fixed assets or other assets and liabilities that may impact your taxes, and we want to understand what those are. We also want to know what your equity position is in the company, because that'll help us set the basis as to whether we can take some of these potential losses if needed. So having a good set of financials in place is really important in understanding kind of our tax burden and what we need to do to file a tax return appropriately.
So to file a business tax return, the primary reports that a tax CPA will usually use to file your annual or quarterly business tax return include an income statement, better known to some as the P&L, the balance sheet, and between those two, those are generally the primary reports that they use, whether it's at the end of the month, the end of the year. You know, it kind of just is contingent on what your tax filing schedule looks like. But for most people who file, I would say it's usually annual. And so your income statement or your profit and loss statement will cover the course of the year. And then your balance sheet will cover the very last day of the year that we have covered. So usually that'll fall like on December 31st of the tax filing year, and that we'll hand over to the CPA. And then others will also maybe sometimes also ask for reports such as your trial balance from the course of the previous tax filing year, and or maybe the general ledger, just to get a better sense of the detail around how you have captured your business activity over the course of a certain period of time.
So to view reports, click on this reports link on the left navigation bar. This will take you to some of the key reports which are used at tax filing time, or even for your personal, monthly checks or quarterly checks. As you can see, you can find invoice and expense reports, payment reports to kind of guide you through how much payment is received, how much payment is to be received from different clients, accounting reports. Now, these are the key reports which are used by your accountant or by yourself when it comes to year-end tax filing. Let's quickly get started with profit and loss. Once I click on this report, this gives you an overall summary of where is your business at. So it captures the income, the gross profit, all expenses which we entered, total expenses, and the net profit. And most businesses pay tax on the net profit. So this is a very useful report which captures all this information. A couple of things you can do in this report is you can go to more action, download an Excel version of this report. We also have an option of expanding this report to a monthly view for the entire year. You can also send this report by clicking here to your accountant or whosoever you want. You can also give your accountant access to looking at this report. We'll talk about that in a few minutes. You also have an option of changing settings. For example, if you would like to view this report by billed or collected, you can do that as well. You can change the view or group by a month or quarter, change the currency on reports, and also change the date range. So at the end of the day, this is the most useful report when it comes to tax filing, which gives you a quick snapshot of what is your net profit after all your expenses were subtracted from your income.
They should start doing that immediately. So having a proper payroll process in place is really key for a small business, and I've seen countless businesses that don't do that, or just try to pay people under the table, or try to treat them as contractors when they're really employees. You really need a good payroll process in place, because that's going to make sure you do everything right and make sure you're staying compliant in regards to this. So having a proper payroll solution in place means paying payroll on a timely basis and make sure you're withholding federal and state taxes both from an employee perspective, but also an employer perspective, and that we're remitting those taxes on a regular basis soon after that payroll is complete. So we don't run into the issues of penalties or fines for late payment of taxes. We will also want to make sure that we're doing this on a regular basis in accordance with our payroll schedule, and that then we file payroll tax returns on each quarter end to the respective government agencies. Making sure we do this right ensures that we don't run into major issues at the end of the year, or a situation where you owe a bunch of taxes to your state tax authority or the IRS and you don't have the money to pay it. So a proper payroll process in place is really key. It's mandated if you have employees, and make sure you stay compliant and you're paying appropriate taxes on a timely basis.
In many states, the government organization will somehow find out that you are a business, and B, when they do and they don't see that you've either been registered and or are paying the necessary payroll taxes, then more than likely you'll get a letter asking to register with them if you're not already registered. And if you are already registered but just simply haven't paid the necessary fees for having a staff that you're employing full-time or part-time or whatever the case may be, as it follows state guidelines, then you'll probably also need to fill out a series of paperwork reporting what you may have paid out to your employees, maybe other things such as your earnings for the business. It's really all kind of contingent on the state that you are operating the business out of, but more than likely, the best thing to do is to always just try to register with the necessary government entities ahead of time, only so that you can avoid any potential penalties and fees on top of any existing taxes owed on payroll.
One last thing I want to cover is we have a lot of integrations which you can make use of using FreshBooks. So to make use of integrations, click on the add-ons button or the add-ons link right here. This will take you to different integrations which FreshBooks support as of today. One of the key integrations which a lot of users use is payroll. To enable the payroll integration, click on Gusto is our payroll integrator. Click on Getting Started. Once you do that, you can then select Connect to Gusto. This is pretty straightforward. You can then log in to your Gusto account or set up a Gusto account, and transactions will simply flow from Gusto to FreshBooks. That's it. This covers a high-level view of how you can use FreshBooks during tax time.